but I've always wanted to be on Wall Street.
Yes.
And in as much as I haven't got into Wall Street yet, but I trade on the Wall Street. So in a way, I've actually made it to Wall Street. Yeah, so that being said, I've always admired how, because the stock market alone, it's a 3 trillion plus industry, and that's daily.
Yeah.
So I've always wondered if I could get like 0.0001 of that money,
yes.
how far could I be? And that's always motivated me to always want to learn and get into the industry. From a very young age, I've always wanted to be a part of the industry of the financial markets. Yeah.
Now, tell us about your journey, where you started from, of course, studying business and commerce, and then how you got into the financial market space.
Yeah, well, I did my undergrad it was a BCom, and then
Makerere?
No. I studied at Rhodes University in South Africa.
Wow, okay.
Yeah, I did all my university education. So I started with a BCom, which is a Bachelor of Commerce, but I was really, really interested in financial economics, because to me, that's where my passion lay. And after that, I decided to do what they call an honors in financial economics.
Yeah.
And from that, I was able to add on a few more courses and then do finance, masters in financial markets. Yeah, because you're required to have a quantitative background. Yeah.
Now, talking about the African markets, when was the first time you thought of buying a stock, and what was the experience?
Well, that's quite an interesting one, because my first ever stock was actually Bank of Baroda. I went to Diane Blair on Missouri Courts, and I got the little money I'd saved up at the time. I said, now's the time. I was actually new to the game, because I hadn't really, sorry about that, I hadn't really gotten to learn enough or a lot about how the markets work and whatnot, but I was really passionate about it. So I decided to go to Diane Blair. I opened up my brokerage account. I put in all my little pocket money at the time, and I went away.
Okay.
Now,
you were still a student back then?
Yeah. I was still a young student, possibly my first year or so.
Okay.
And then it so happened that after 3-4 years, I came back hoping to have seen an appreciation in my stock. I found the stock still trading at the same level at which I got it.
Yes.
And I was given a dividend of it was a dividend more than 20,000 for all those years.
Yeah.
And I thought to myself, if I had bought goats, maybe I would have been better off,
Yes.
But that only just helped me learn that even with financial markets, you have to be worried about where you invest your money. Because at the end of the day, you're looking for a return that should be above market return. Yeah.
Now, like you said, you went away, you came back, and didn't that discourage you? Most people, okay, in Uganda in particular, especially the investors we've been able to interface with, they say, okay, the returns and the market as well is not moving and so on, and they are quite hesitant to invest because of some of the things like you've mentioned.
Yeah.
Didn't that sink your desire and your passion for investing in the markets?
Yeah, well, at the time, one could have said I was demotivated, but then it only spurred me to understand, or rather to research on how to make greater returns.
Yeah.
Because, for example, in as much as I did make dividends, I got to realize that I had invested in an illiquid market. There's not so much transactions happening, so you do not expect to have returns per se, because there are not enough buyers and sellers in the market. So if you put your money there, it's basically just going to sit.
Yeah.
Now,
when you moved to South Africa and got part of the Johannesburg Stock Exchange, what was the difference there?
Well, the JSE is actually Africa's largest stock exchange. It was actually founded in 1887. So based off that, the mere fact that it has been around for so long, and Africa's largest stock exchange by capitalization, you get to realize that there is a lot of market. There's a lot of market. There is so many buyers and sellers. Because yet again, like I'd failed to mention, when I went to Baroda to sell my stock, they told me they would have to first find a buyer before the transaction could be completed. And to me, I found it strange because I should be able to sell my stock in the very instant.
Yes, you need to sell.
Yes, if I need to sell right now, I should be guaranteed that there will be a buyer on the other opposite side willing to buy my yes, and that's the kind of market we're talking about. Yeah.
Now, when you move to South Africa, you see that the stock has over 425 listings with various products, you know, and our market here, for example, we have 18 listed companies and 8 of which are cross-listed from Kenya. Is it the number of companies or listings that affects activity? Is it the government? What do you think are the forces that, you know, push people to invest, or what do you think should be done to push people, especially in Uganda now, to start investing in the capital markets?
That's a very good question, Anthony, because I've long thought about this. And in my opinion, I think government should put incentives for domestic companies to actually list. Because one thing about government, if I to follow up on the addresses I keep hearing of the president and whatnot, they say that bank rates are too high. And the whole notion of having a stock market is it's there to enable companies to get financing in exchange for equity at much lower rates, because here you're not going to be commercial bank rates are very high. They're in the tens. All this, and yet again, it's not listed on the exchange.
Yes.
You know, such companies, Kakira, what?
Yes.
If we can have them list on the stock exchange and have Ugandans provide capital in exchange for equity, I feel like it would spur investment in the stock exchange. And I actually liked what the president did, because he went ahead and kind of coerced MTN to list onto the Ugandan Securities Exchange. And you could see from the IPO how well people took up the shares. I mean, Ugandans, it's not that we're afraid to invest, we just don't find it worthwhile.
Yeah.
Yeah.
The thing that most Ugandans ask is Mfunira muwa, and that is a thing that I've also been trying to investigate. Besides the dividends and the capital gain, are there other ways of, you know, making money on the stock market? And there are products we've heard of, like derivatives and other securities that are modified kind of to make people, you know, invest, you know, to diversify the whole thing. Because when you tell someone, you know what, when you invest in this company, they might, because you're not even sure, they might give you a dividend at the end of the year if they make money, or you sell your shares at a higher price. Someone will be like, honestly, when am I going to do that? So what are the ways that the stock market can be profitalized and made more profitable? And what are some of those products you think people should look out for?
Well, it's a good thing you mentioned derivatives. Derivatives are a unique kind of product. And personally, I would not advise novices to get into derivatives, because with derivatives comes leverage. Now, leverage is a double-edged sword. You can make 10x, 20x, 100x, you know, with your derivative, but it can also happen that you can also lose just as much because of leverage. So leverage is kind of like a double-edged sword, and I wouldn't encourage people that are not well-versed with such products to actually trade derivatives. However, there are things called ETFs, electronic traded funds.
Yes.
Those are much cheaper for people to get into the stock exchange, because if you may find that, for example, Now, if we're looking at some stocks that are quite expensive, quite pricey in terms of unit share, you might find that you may not be able to purchase a lot of shares.
Yeah.
And by a lot, we mean something from 1,000 shares, you know, because that's what would consider the bare minimum standard, 1,000 shares, you know. But with ETFs, they help you in the sense that they're low, you can get whatever amount of shares at a low cost, you know. So it kind of helps those who are trying to get into the market to have a feel. Of course, then there's also, the index shares, the ones that track the index. They will give you a bit of a proportion of everything, and that's a good way to also
Diversify risk.
Diversify risk and also try to benchmark with the market. Yeah.
Okay, let's go into a short break. We need a further explanation, especially on the derivatives and the ETFs and how they work. Ladies and gentlemen, we are still talking to Mr. Malik Musumba. We're going into a short break, but if you want to learn more on the strategies you can use to make yourself money on the stock market, stay around.